Welcome to Money Talks. I'm Genevieve Westcott with your latest financial news from across New Zealand and around the world. In this edition, our eye on Europe. Big banks are pressed to help solve the euro crisis by raising billions as a buffer to the Greece fallout. U.S. stock markets rally with big companies like McDonald's and Caterpillar reporting solid earnings, and American fingers are crossed that Europe's leaders will ease the region's debt troubles. And the death of a dictator. Libya's Muammar Gaddafi is gunned down in public view. With democratic elections now on the way, what are the implications for the world and all that oil? Now, just when the Eurozone governments thought it couldn't get worse for Europe's single currency, it did. 27 shell-shocked EU finance ministers meeting in Brussels on the weekend were already reeling from the worst French-German rift in more than 20 years, and a failure to resolve the problems that have brought Greece and the euro close to the brink. Now, a new bombshell is hit. A joint report by the EU and the International Monetary Fund warning that without a default, the Greek debt crisis could swallow the Eurozone's entire €440 billion bailout fund, leaving nothing to spare to help the banks of Italy, Spain, or France. Joining me now is ASB Chief Economist Nick Tuffley and Spicer's Senior Financial Advisor Jeff Matthews. All right, this is kind of a Eurozone crisis debt 101. It's been going on for months and months now. Nick, where is it at right now?
Well, probably about the same place that it was a couple of months ago, really. Look, we are starting over the last month or two to see the sorts of proposals that we should be seeing for a more comprehensive package. So in a broad brush sense, the Europeans are heading in the right way. But the devil is in the details, and that's where there is still the arguing and the bickering and disagreement going on at the moment.
The problem in Europe is you've got 17 countries in the Euro, 27 countries in the European Union, and you have to kind of go back and get political buy-in at the local level. In the US, it was a little bit different. I mean, after Lehman Brothers went under, the Treasury just came out with a cannon of money to be able to pump at the banks and fix the problem, and it did fix the problem, and they got most of their money back within a year, 18 months. Europe has been behind this issue all the way along, and it keeps getting away from them, and they need to come up with a big number to reassure markets that they're actually on top of the issue.
Everybody has been saying, of course, that the answers are going to come this week, but it's clear now that that is not going to happen. Germany's Angela Merkel may have some problems getting it through her parliament. Apparently, Italy is in trouble as well. People in the parliament there are divided as to how austere the measures should be. And now, of course, we see France bickering with Britain. Yeah. It's getting pretty ugly.
That's politics. I mean, they don't have any other choice. They have to fix the problem. Otherwise, we go back to what we had in 2008, and nobody wants that. So it's just a question of who ends up paying for it. What they're proposing, what the Germans really want, is the bondholders to wear much more of the pain than the taxpayer. And it's all about who ends up wearing the price tag at the end of the day.
Nick, initially we were talking about a 21% haircut. That was only in what, June, July? It's going up all the time.
Well, that is a talk somewhere between 40 and 60% haircut to those bonds. And of course, the European banking system is not that keen on that idea either, so they are opposed to that. But of course, if you do start cutting the value of the bonds quite dramatically, then you've got to then look at the banking sector and how do you recapitalise that and get the confidence back into that. So there's just this whole web where the government debt is causing problems for the banking system, but if the governments then have to bail out the banking system, then that puts more pressure back on the government's balance sheets as well. So they need to come up with something which solves the whole problem of Greece just having simply too much debt, shoring up all the other countries that people have got question marks over in looking after the banking system.
What needs to happen, and what needs to happen quickly in your view?
Well, in my view, three key things. First is just give Greece a big haircut on its debt. Basically, Greece has been asked to diet by cutting off its arms and legs. You lose weight, but it kills the patient. That's where we're at. The reality is Greece has too much debt. So we need to recognise that. Second part is, because you have the other countries that people are worried about, you need to have a much, much bigger financial rescue package behind them and stand behind those countries and say, we're going to cover every cent that they need in terms of their financing requirements going forward. And the third part is recapitalising banks, because if they take a haircut on their bond holdings, they need to be propped up, and you need to restore the confidence in the banking sector. And as we know with banking sectors, we learnt from 2008, confidence is key with banks.
Confidence is king. Let's go over now, talking about confidence, to the United States. Things there are looking a bit better. Caterpillar had sensational results, and so did McDonald's.
Yeah, and even the banking sector has held up reasonably well in a market that's gone a little bit sideways. The problem in the US, apart from debt issues, is the housing market continues to decline. I mean, the house prices haven't changed much since August, but the latest survey came out that 18 of the top 20 cities, house prices are off about 3.5% from the same period a year ago. You can imagine in New Zealand what it would do to people's psyche and net worth if house prices were devalued by a third. I mean, everyone in this room would feel the pain, and that's what's happened in the States in the last couple of years. So you've got this spiral of weak consumer confidence because the housing market continues to plummet. You've got unemployment at 9%. On the other side, lots and lots of companies, as you say, are doing really well. Having been overseas recently, there's almost a queue in the door to get into an Apple store anywhere, and almost a queue to get in the Nike store. So, and McDonald's are doing pretty well, as you say. So companies are in pretty good shape. They've got a lot of cash on their balance sheets. They're looking for some political certainty so they can actually put that cash to work.
Talking about political certainty, let's go over to Libya. Of course, Muammar Gaddafi bit the big one. He's gone out of the picture. Democratic elections apparently on the way, but could be maybe a year away, maybe 2 years away. Nobody knows. What's the world oil situation like at this point in time, Nick? And how is Libya coming back on stream going to change things for people like us?
Well, at the moment, oil prices are a bit middling. They're well off the highs they were when Libya first started becoming, I guess, problematic, and you first had the uprising coming through. They're off the lows that we got to during the more panicky moments a bit earlier on. So they're at a reasonable level around that $110, $120 a barrel. Well, as Libya comes on stream again and you get the disruption reversed, that will help with the oil supplies. It should keep prices reasonably capped, I would think. We've also got the demand story where if global growth is slowing a bit, that will help keep oil prices down. Coming up after the break, it's all over. The Rugby World Cup bows out and the New Zealand general election moves into the spotlight. Politicians will be talking economy, economy, economy. How are we doing, really? According to the U.S. Department of Agriculture, New Zealand dairy production will set a record this season. So answer this in our Farmers Facts and Figures quiz. How many million tonnes is our New Zealand milk production expected to grow, according to the Yanks, in 2012? The answer when we return. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, according to the U.S. Department of Agriculture, how many million tons is our milk production expected to grow in 2012? The Americans figure it'll be up 19 million tons. That's about 2%. Now, that's not too bad. We're back with ASB Chief Economist Nick Tuffley and Spicer Senior Financial Advisor Jeff Matthews. And we turn our laser focus now to the New Zealand economy. What's hot and happening? Starting with our New Zealand dollar, of course. Nick, take it away. How are we doing? The New Zealand dollar, it's a bit like going up the escalator and down the lift shaft. So if you look back, we've taken quite a plunge since early August. And then after that, all the risk aversion came to the fore. So we've seen quite a drop, some recovery, a few wobbles overnight again after a bit of a surge. And again, it's coming back to this European crisis where we seem to be 2 steps forward, 1.5 steps back. So what we're finding is that when we got this risk aversion bubbling up, we'll tend to find our currency is weakening. What's happening is the money's going to the safe havens, and that's primarily the US, because the Japanese and the Swiss really can't take much more. So we tend to find that we are dipping against the US dollar and probably underperforming. We tend to underperform those other major currencies as well. The New Zealand dollar and the Australian dollar, very pro-cyclical, very linked into people's perceptions of the world. So when things are looking a bit rocky, we tend to find our currencies fall a little bit faster, probably recover a little bit faster when people are feeling a little bit happier. Here at home, of course, on Tuesday we had the pre-election look at the books. The government had to open it up. All the political parties and the country now knows how good and how badly we're doing. What does it tell us, Nick? Well, the Treasury's forecasts were probably reasonably okay in terms of the economic outlook, assuming we go down the path that we will want to go down to, which is the crisis gets contained. And on the fiscal front, the accounts showed we're still likely to get back into a surplus in the June 2015 year.
Do you buy that? Do you think we're going to be back in surplus by 2015?
Well, it's a case of I think we can make sure it happens. With this update, what it really is just updating the economic outlook, so there is no real policy changes that come through. So the reality is I think we can do it. We had the view that perhaps the surpluses wouldn't be quite as strong when you get back into them in that 2015, but it's margin of error stuff really.
Do you think we're going to return to a balanced budget by 2015?
I'd say it depends on global growth and how well we can export our way out of the current situation, and two is how much we can cut back government spending to kind of shrink that gap.
Yeah, one of the things Treasury tells us that in a worst case scenario, we could lose exports of up to 10%. That would be massive for this tiny country, wouldn't it, Nick?
Well, it's a pretty big dip. So the Treasury scenario, they had, I suppose you could say, a milder form of what we saw happening in 2008, 2009. So yes, we take a dip. We lose about $35 billion of cumulative growth in the size of the economy over a 5-year period. So that's nothing to be sniffed at. We do know that if the rest of the world does hit hard times, we'll get affected to some degree. But we have that buffer of Asia, and that's getting more important.
Yeah, and Finance Minister Bill English is making no secret of the fact that if his government goes back in, we can expect to see some real tough fiscal financial constraints. That means loss of jobs, probably public sector, Jeff.
I would think so. I mean, if you look at the business community, they felt that in the first term the government's been perhaps a little bit light on tackling some of those issues. I mean, a lot of things happened in the previous regime with, you know, interest-free student loans, working for families. At a time we were in a boom, we can't afford some of those things. We can't afford to have people retire at 65, and yet nobody really wants to address the issue. So there's a bunch of things. We know we have an aging population. We know that healthcare and pension costs are going to increase, but nobody has really taken it, you know, by the cojones and actually got on and dealt with the issue. It's one of those things that nobody really wants to talk about. It's not a vote catcher, put it that way.
No, none of these tough political decisions are vote catchers. That is clear. How are we doing on the inflation front, Nick?
Well, actually, the figures that we've just had show things were a little bit milder than expected. So only 0.4% up over the September quarter, inflation down to 4.6%, and that still includes about 2 percentage points of the GST.
And how do you account for that?
Well, what seemed to drive the result was, and it's linked a little bit to the rebuild, or more specifically just the slowness of getting it started, construction in the housing area, maintenance costs in particular, building a new home, were pretty weak after having spiked a bit right after the earthquake. So there does seem to be a breathing room. If that building is delayed, which we don't really want it to be delayed, it does mean it's a later time for those sorts of inflation pressures out of that to start appearing. So it gives the Reserve Bank a little bit more breathing room. They were a little bit anxious about inflation if we go back just 3 months, where they were very close to lifting interest rates. So with the European crisis and inflation, they can afford to sit on their hands for a while longer.
Of course, the Reserve Bank makes its announcement on the official cash rate tomorrow. What are you picking?
No change, and I think the Reserve Bank will be pointing to Europe again, also pointing to some signs that the recovery perhaps hasn't been quite as strong as what they were expecting. So expect a massive kick for touch, I think, from the Reserve Bank, because really they want to see what happens with the European debt crisis, and also what those Americans get up to later on in the year with their debt issues, because they have some things to sort out before Christmas too. So the Reserve Bank's very aware there's plenty of scope for further financial market volatility like we saw back in August.
Jeff, how are we doing compared to the Australian economy these days?
Australia has the benefit of being able to dig stuff out of the ground, and just, you know, China and India and other places just want what they've got. We have to be a bit smarter in our exports, and so, you know, obviously farming is a major component of that, but we have to look at other businesses where we can, you know, add value and grow jobs.
Yeah, and meanwhile, the latest net migration figures tell us that people continue to pour out of New Zealand, going to Australia permanently, even though the job situation there isn't quite as rosy as some people suspect. How's that going to affect us here at home?
Well, what it does mean if we continue to get that net outflow, I mean, our net migration figures are pretty much down to flat at the moment, so the number of people coming in is sort of barely replacing the people leaving. So it does mean that in terms of the housing market, a bit less population pressure coming through. Perhaps in some ways that's quite good, given that we do have a lot of people we need to be housing from Christchurch who don't have anywhere to live. But it does mean that sort of overall growth in the economy tends to be a fraction weaker through slightly less demand for housing, slightly less retail growth. That's on a total basis. On a per capita basis, per person basis, it doesn't make so much of a difference.
Okay, gentlemen, very quickly, 30 seconds or less, best advice to our farmers who are watching at home. How would you vote in the next election?
Can I mention the political parties?
Sure, you can.
It has to be national.
Why?
Labor had 9 years in power, and what we're trying to do is, untangle some of the things that they did during that 9-year period. And National is probably the most pro-business of the political parties. And so it's all about the economy, isn't it, what you said earlier?
Coming up after the break, future-proof on the highways and byways of the economic world. Buckle up as our experts take us along for the ride and point out what they'll be watching over the coming week. But first, answer this in our Farmers' Facts and Figures quiz. How many new dairy farms and cows will come into production in New Zealand in 2012, according to the U.S. Department of Agriculture? The answer when we come back. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you how many new dairy farms and cows will come into production in New Zealand in 2012, according to the U.S. Department of Agriculture. 80 to 100 new dairy farms, adding an extra 110,000 cows. Not bad. And now it's time for Future Proof. What's coming up for our experts? Let's talk about the stock markets around the world, Jeff. Overall, they're pretty buoyant and pretty optimistic. Do they know something we don't?
Well, I mean, investment markets are forward-looking. They're looking kind of 3-6 months ahead, and what we've seen basically in the US is the market's up 14% since the beginning of October. So it's taken on board a lot of the bad news that we had, out of Libya, out of Europe, and it's factoring in that, okay, the economy is still growing. They're still going to grow at probably 2% in the US. There are issues that it has to resolve, but they're fixable. It just takes time.
Okay, let's look around the world. Nick, really, what worries you as an economist? What are you watching out for?
Well, the key risk is still Europe, so we do need to get a resolution of that debt crisis or a containment of it. And I think we really do have to be prepared for the fact that it's going to be a rocky road until they get a solution. We have Angela Merkel talking about it's going to take months to sort things out. So whilst we're busily eyeing up a summit that's just about to happen and a G20 meeting on the 3rd of November, we perhaps shouldn't really be hopeful that things are all going to be magically solved by that point. So,
yeah, because the reality is that they live in the real world too, and they are all liable to their constituents, and they are very different constituents.
Well, that's the challenge. I think we should remember that when we had the last agreement about Greece done in July to beef up the Financial Stability Fund, it took until a couple of weeks ago before the last of the 17 parliaments actually passed it, and even then they had to basically promise a new election next year to get it through. So yes, we did have the summer holidays in the way, but it just gives you an idea of how long it can take for things to, one, just making agreements only a small part of the story. You've then actually got to go and have everybody pass it. So the contrast between the US crisis management in 2008-2009 and what we're seeing in Europe, it's very different.
And the reality is too, gentlemen, that they've got to get a buy-in from all of those private investors to take the kind of drastic haircuts they're talking about. How tough is that going to be?
Well, it'll be tough. I mean, if you think about it, I think the Greek banks own about $200 billion worth of bonds, and what you're saying is we're going to halve the value of those, and so...
Gee, half would be lucky, wouldn't it? They're talking about 60%
Well, if you
plus.
say half, then most of the Greek banks are going to be in default, and so the government doesn't have the money to bail them out, so you get in this kind of cycle where it feeds on itself. I mean, if you look at things locally, we've had the severe earthquakes in Christchurch, and everybody in New Zealand is paying their way because we're going to help our mates out in Christchurch because they're New Zealanders. That's a relatively easy fix. It's much harder to get New Zealanders to contribute to an earthquake fund in Indonesia or Chile. Because,
or Turkey.
Or Turkey. And so I can see in Europe, having been there last month, most Germans I spoke to weren't exactly crazy about bailing Greece out because, they're not Germans.
Yeah,
and that's, even though we're all in this together, we're all Europeans, there are still, kind of tribal instincts going on there. And so, and the Germans, work hard and they say, why should these people retire early? So there's a limit to how much austerity you can do in Greece. I mean, Greece has to grow its way out of the problem. And as long as it's tied in with the euro at the moment, it's got problems.
Okay, what else have you got your eyes on, gentlemen, in the coming week? What are you going to be watching here at home?
Well, in the financial market side of the world, we've obviously got the OCR decision coming up, so just keep an eye out on that. Whilst we don't expect a change, there's always the statement and the wording that it gives. So most people are expecting rates are on hold until sometime into next year, so it'll be interesting to see if there's any guidance as to whether the Reserve Bank thinks things could be even later than around the March that they signalled recently. So that's one aspect to it. On the currency markets, and in general, I think with equity markets, we are going to be seeing those trading quite closely along over the next week or two with how all these negotiations are going, because it literally is a day by day, hour by hour. Someone says this, someone says that, and markets are going up and down as they try and decipher whether we're making any progress or whether we're suffering some setbacks. Obviously,
the election coming up and what kind of policies come out from the various parties, But looking at the opinion polls, you'd have to say that it looks like a national victory, and the question is, do they end up in coalition with anybody, ACT or whomever? I mean, so that'll be the interesting aspect. And I say New Zealand's always, dependent on what happens in the US and what happens in the wider world. So to some extent, we'll bounce around for the next little while until some of these issues are resolved.
What do you make of ACT's Don Brash now heading off to London to talk to the top bankers there?
Is that going to help win Epsom?
I don't know. John Key's not going to be voting for him, that's for sure.
Well, yeah, I haven't really followed the ACT story. It just looks like the party's self-destructing, from the outside. But if he wants to go to London and talk to bankers, well, and if he's serious about developing, the ACT party, he really needs to be here.
When we look around the world, what are the trends that you are picking up on, Nick?
Well, what we have started to see over the last few months is some signs that going forward, Europe and the US do look like they are slowing down. We've seen a number of manufacturing indicators starting to weaken. Consumer confidence in the US has fallen quite sharply. So the growth in the quarter that's just been, the third quarter, looks like pretty decent in the US, a lot stronger in the first half of the year, but it's the closing stages of this year and the early parts of next year there's a little bit more anxiety about for the US.
It's not going to be an easy fix, but I mean, US corporates, as we know, are sitting on something like $1 trillion US, and private individuals over the last couple of years have been doing the right thing. They've been repaying debt, repaying credit card debt, and they're sitting on about $1 trillion, sitting in bank accounts, earning probably less than 1/4%. So there is money out there. It's just not actually out in investment markets at the moment because of insecurity. Yeah,
but you got to wonder when is that going to be triggered? At some point, somebody's got to say, "I believe in this country. Yep. We're gonna start making progress now." But it ain't happening.
It's not happening at the moment, and that's partly because of political uncertainty in the US. You've got this kind of whatever Obama comes up with, the Republicans are going to vote against. So you've got this kind of logjam when you actually can't get any legislation. You can't even get people appointed to jobs, in the administration because they'll veto them.
Yeah, and one thing for sure, no matter where you are in the world, it's kind of like that Where's Wally book. No matter where you are in the world, very few politicians want to take the tough decisions. They're all playing for time. And meantime, Rome continues to burn, does it not?
Well, that's the danger. I mean, that's the danger that sometimes you have to step up to the plate and make some tough decisions. I mean, to some extent, that's what Labor did in 1984 when, after they took over from Muldoon. They had to make some tough decisions, and they pretty much set the motion in place, to transform the local economy, getting rid of subsidies for agriculture. It was painful at the time, but, having read a couple of Swedish publications recently, they were raving about how well New Zealand's done with a deregulated, no tariffs farming environment compared with most places in Europe. So sometimes the tough decisions end up being good decisions.
Gentlemen, thank you very much. Thanks to my guests, Spicer Senior Financial Advisor Jeff Matthews and ASB Chief Economist Nick Tuffley. Be sure to check out our website. And with all the financial uncertainty in the world today, we're doing not too badly compared to Belarus. Seems desperate times mean desperate measures. The country's central bank is selling off household goods to try to raise $16,000 I don't know why so low. They're offloading coffee cups, sugar bowls, and very old televisions, not to mention a whole bunch of safes. Don't need to worry about where to keep their rubles, apparently, because there aren't any. Poor old Belarus, the butt of bad jokes everywhere, it seems, be it their banks or their music.
I always feel sorry for those Eastern European countries at the Olympics, because they've got rotten national anthems, don't they? Here comes Belarus. Hey! Look, the guy at the front, stupid national anthem. Look at this flag, two bears fighting over a pineapple. We don't have pineapple in Belarus. Where did they get it from? Come to Belarus, where wild animals will steal your fruit.
Keep the faith. See you next time.